So what is a credit score? It is a scoring model known as FICO, and they take your particular credit situation and compare you to your peers. Sounds great. Like, jury of peers is now determining what your credit score is. But that's how it works. If you have a mortgage, 2 credit cards, 2 auto loans, and a personal loan, they are going to look for other credit profiles out in America that match that, and then compare your balances to your credit limit and your payment history to everybody else that meets your similar credit profile, and then you're assigned a credit score. We have 3 credit bureaus that do this: Experian, Equifax, and TransUnion. They all use the FICO model, but they apply it differently. That's why you have 3 different credit scores. In Arizona, TransUnion typically is going to be your lowest credit score, and Equifax is typically going to be your highest credit score. It varies from state to state. It varies based on what banks are reporting to what credit bureau. Not every bank reports to all 3. Not every collection agency reports to all 3. So you are going to have a different credit score if you have a collection and it's only being reported to TransUnion or only being reported to Equifax. Your credit score is taking your credit habits and comparing it to other people with similar credit habits. So, what makes your credit score good? Paying your debt on time. Not being a heavy credit card user, meaning you keep your credit card balances at 30% or less of your approved limit. Not going out and constantly shopping for credit is what's called a credit inquiry. And the more inquiries we have, they look at it as you are desperate to go borrow money. Maybe you've decided to spend 2 months shopping for a car and go to every dealership in the state, and you have your credit pulled 30 times, but they don't know that. They see you as being desperate to try to obtain financing. It's going to bring your credit score down. It's all about managing your debt load, being responsible with debt, and making your payments on time. Don't close credit card accounts out. That will make your score go down. If it's a 0 balance and you're not using it and they'll allow you to keep it open. Limit the number of credit cards you have. It's so tempting to walk into Home Depot and Lowe's and Kohl's and Target and save 10% if you open the card. Save 10% if you open the card. Get $500 if you open this card. Don't rack up a bunch of different little department store credit cards or different bank credit cards. Pick 2 or 3. Have one that's for emergencies only. Maybe you have one that's travel rewards and that you use most often. But don't load your credit report up with a ton of different credit cards. It is going to be tempting to use, and before you know it, your credit score is going to go down. Credit is tricky, and it's one of the first things we need to look at when you go to buy a home. So if you're in the market to purchase a home, I would say you start 90 to 120 days out before you need to move. We pull that credit. We look at it. There are going to be things that we can tell you to change, pay off, or do differently to improve that credit score. Because every 20 points in your credit score is going to help you get less down payment or maybe a little bit better rate. So I'm going to leave you with this. Don't overuse your credit cards. Don't have too many credit cards. Make your payments on time. And those are the best things you can do to keep your credit score high.